Hi guys, how are you? Mine this one, Titanium. Welcome back. Let's do a video. I'm just going to kind of go over some of the calls in TradingView, and I encourage you to come down and follow me on TradingView.com, Real Macro, and I really like this platform because it allows those that can to illustrate their abilities. And of course, those that can't, the Logans of the world, the Mike Normans of the world, the Paul Gambles of the world, all those experts, the Warren Moses of the world, the Natasha Keltons, all these experts who are economists, and I'm not an economist, and I'm fooling people and whatever. um, it allows us to really show what we got. And those that can't do shouldn't be talking. Anyway, this is a private this is a private showing here. All right, this is for my subscribers. Patreon.com/realmacro. Come down if you want to learn more than just the free stuff. Uh, and also Patreon.com/BKC. Bare knuckle charting. What is bare knuckle charting? It's being able to look at a chart like you're seeing in front of you right now, and being able to analyze it, and from there you can determine what's going on with the markets. But you can't make money by drawing lines in the chart. That's just ridiculous. No, that's not what I do. It's real macroeconomics, right? It's the big picture. And but you're not an economist, Nick. Stop lying to people. I'm more economist than any economist out there. Okay, because this economist, me, okay, is able to tell you what the economy is doing, right? And that's what economists is for, no? Or is it to make theories and papers and whatever? So anyway, let's drop that. So this is back on February 18th. Right now, I've been following this COVID-19 for a while now, and you know, from the beginning when it was 300 cases, I'm like, this is not SARS, it's not MERS, this is different. This is growing way too rapidly, and sure enough, I was right. But until the market figured it out, it was very frustrating. Believe me, it was extremely, extraordinarily frustrating. So when people say, well, you can't know more than the markets are perfect. No, they're not. You can know more than the markets. This is one of these times, okay? You just, you got to stand your ground. Uh, I asked several of my perma bull friends, why are you buying? Well, the death toll is not too high. Well, it's not time to go beta neutral. Well, I've heard 10 million things. I'm like, yeah, but what value are you buying up here at all-time highs? There's no earnings growth, right? Why are you buying? Well, just keep. I'm a long-term investor. I heard all sorts of stuff. Uh, so ultimately, I was proven right. Anyway, so this is a private one, and I really should be showing you this, but anyway, I will. So this was a setup. Again, you had the thrust up move, right? You can see it, nice little channel, 1, 2, 3 up, and then the next move was coming down, and sure enough, it went all the way from 13.8 down to 12.1, and it doesn't end there. Gotta keep clicking, and here we are now at 11.6. 13.8 to 11.6. That's a massive, massive move. Okay, guys. So whoever tells you you can't make money understanding charts, they don't understand charts, and that's why they're saying that. They don't understand macroeconomics. They don't know how to contrast the two. 10-year yields, another great call. This was back from February 18th. You can see it here. This was a freebie, and I said, look, here's a drop. Right, here's the little wedgie thing. Right, so it's a drop. It's going to continue on down, and sure enough, where are rates today? Geez, my God, 0.82. 0.82. No, it's going to stay within this range. It's going to stay within this range. This is Logan Mohtashami. It's going to stay within this range. Yeah. I like your range, buddy. How's that working out for you? Again, this is important because, it's a flight to quality. See, I'm an investor. I'm a trader now. I said it's a flight to quality. It's a flight to safety. What safety? Don't think... yeah, it's true, but don't think of it like that. Think of it as the market giving the economy a stimulus. Because that's what's happening, right? When interest rates come down, the market interest rates are setting rates lower. That is a stimulus for the economy. It's built in. It's automatic, right? Cause and effect. And that's the beauty about macroeconomics. If you understand them, it's wonderful. The way it works, it's an organism. There's a lot of beauty in it. Mr. Mosler said that the government is the monopolist and sets price wherever it wants. Right? Mr. Mosler. Yep. Mosler doesn't know his ass from his underwear. Right? And I'll show you here in a moment, but the Fed, the government, does not set rates. It is the free market that sets rates. And that's why the Fed has been chasing the interest rates lower this whole entire time. And it started back in July, right? You had remember that big drop in interest rates, and then it just kept on dropping, and then they kept on lowering interest rates, trying to play catch up. And now here we are, 0.82, and they're still chasing. And I'm telling you now, there's going to be another rate cut. The way it's going, at the speed that it's dropping, there's going to be another emergency rate cut, or in 2 weeks, when the central bank meets, they're going to lower rates again. Why? Because that's what the market is telling them to do. So this bullshit of, the government sets rates, they set the price. No. Clearly that's wrong. Let's take a look at these things. They're private. Let's talk more about interest rates. Here it is, right? Let me show you this. This is a beautiful little simple chart. Anybody can look at it. And back in 2000, rates bunched up, okay? And then what happened? Rates started to fall. Why? Because we went into a recession. 2006, 2007, rates bunched up. What happened? Boom. Rates started to fall. Recession came. Right? What happened here in 2018? This is in the summer, right? Rates started to bunch up again. And we had that big nasty sell-off in December, right? Remember that? And sure enough, here we are. What? No recession? Really? You think that's good? You think that's true? Well, boom. Here you go. Right? We're going into a recession. Everything that I've looked at is we're going to a recession. And then you can have the Logan Mohtashami sitting here telling you, oh, damn it, it's the coronavirus that did us in. Otherwise, the market was great. It was wonderful. Like a retard. No. Remember, mid-cycle adjustment, right? Back in summer of 2019, right? Was it a mid-cycle adjustment? No, of course not, it wasn't. The economy started to tank then. Repos. Oh my God, repos. Oh no, short term. You don't understand repos, Repos, they don't buy the long end and all this nonsense. No, repos were a problem in the banking system. The fact that they don't tell you what it is, the fact that they don't tell you who is going to the discount window, that should clue you in that something's fucking wrong in the banking system. And don't give me, well, it's $1.5 trillion, it's not enough reserves. Well, it was fucking fine for the last 10 years. Now all of a sudden it's no good? Fed doesn't know? Of course they know. They're just not going to tell you. You're not an economist. Yeah, okay. Sure I'm not. So interest rates now are starting to fall. They're crashing, and again, you got to be thinking about what is the Fed going to do? Okay, when they start selling bonds and interest rates spike, interest rates are going to start to spike, right? Somebody's going to start taking profits. That's the scary part. The coming down part, which is so rapid, right? That's bad enough, but going the other way, that's not giving a stimulus to the market. And that's going to be mechanical. What's mechanical? People are taking profit. So they're going to have to start running QE again. And, they're going to keep feeding the beast. Keep feeding the beast until you get that snap moment. When the snap moment comes, oh, lordy, lordy, lordy. Things are going to get ugly really fast. Let's continue here. Let me show you something here. This is not free. This is free. All right, here's SPX priced in gold. All right, now this is very interesting because it topped out. S&P was outperforming gold all the way up to October of 2018, and then it stopped. And what happened in December 2018? Remember that big, huge sell-off, right? That's when the economy started to go kaboom. December 2018. The fact that they gave it injections and repos and lower interest rates and tweet pumps and all this bullshit, trade wars, tax cuts, right? Tax cuts came in December. I'm sorry, in end of 2017 for 18 they were kicking. Remember that stuff? And then suddenly gold started to outperform the S&P, right? That's very interesting. It's very interesting. And here we are now, March 2020, and we're heading for a recession. Oh, it's just the corona. Otherwise, we would have been fine. Jobs looking good. Yeah, you don't know how to read a chart, buddy. Charts has to do with the millennials and the boomers and the little valley there, and it's distorting the charts. Anyway, I won't get into that. So we have this nice little setup here, and if you know how to read a chart, you're going to see that there's lower highs and lower low. And I said, look, the way we're heading, this is going to go at least to the previous lows here, which is 1.9, and possibly start to fall. All right, more or less. So let's see what happened. Boom! Oh my God. Am I right again? God, I'm just lucky, right? I'm just lucky. I'm just a lucky guy. You can't make money with, charting. Yeah, that's because you don't know how to do it. And not you. Here's the NASDAQ 15 minutes. And I typically don't do short-term trades, but when I see them, I'll do it occasionally. It's TradingView, so a lot of these guys, they're the pikers. And everybody's like, oh, look for the bounce. You should be nibbling down here. You got to nibble. Little nibbling. Amateurs, amateurs, amateurs. All right, so big drop. I said, look, you got this nice little flag set up here. This is going lower. Oh no, you should nibble. You should be buying the dips. Buy the dips. Buy the dips. The problem with buying the dips is that it keeps on dipping. And here we are. Boom. How's buying the dip working for you? All right, how's buying the dip working? So here we are for today. All right, and this just kept on dipping, right? that's the beauty of it all. And here we are today. All right, long way down. Nice little call there. Here's another illustration that the market sets rates, and unfortunately this doesn't work. I don't know why, it got stuck somehow. But this was back when, this is February 24th, the interest rates were still at 136. It's going to stay within the range. Yeah, I don't know what range he's talking about, but it was 136, and I said this was going lower, if you guys remember. And sure enough, it did go lower. But look where the Fed's fund rate is. Okay, and this has been the theme, that you had interest rates staying all the way up here, right? This is back in 2000, and then what happened? the market started to sell off. And what did the interest rate, what did the Fed do? It followed. Same thing in 2006. It started to collapse, and then the Fed started to lower rates. Okay. But it's the monopolist. Mr. Mosler said so. It's the monopolist. It's the price setter. You're seeing that, interest rates continue to fall in the next 2 weeks. At the rate they're falling, I'll be surprised if they don't have an emergency rate cut. But anyway, as I said before, you're probably going to see lower interest rates. But you're an economist. UK 100. This one, it really hasn't done anything since 2017. Okay, and as you can see here, you had this nice little wedge, and it started to break down. And I said, oh, that's not good. That's not good. Given the economic environment that we're at, slow economic global economy, it's going lower. Boom! Oh, I'm lucky again. Jesus, I'm just so lucky. A lot of luck here. A lot of luck. Let's take a look at the S&P 500. This is again one of these deals. Oh, it's too low. You gotta buy the dip. You can't make a short call here. It's already down. You gotta be buying. Let's see how this worked out. Lucky again. My God. Lucky, lucky, lucky. Oops. Nope. What was it doing? I don't know what it did. This is private. And let's go here. NASDAQ. And by the way, if you think that I don't get shit wrong, I do get shit wrong. Of course I get things wrong. But you need to go down to TradingView /Real Macro, whatever it is, and take a look for yourself. See what I got wrong. NASDAQ. Boom, down. Yep. More luck for me. Here's another one here. Here's another one. It's a 30-minute chart. Let's see how I did on this one. And this is back February 27th. And the initial part is what you got to look for, right? The initial part. The big sell-off came, right? Popped up right above where I shorted it. And where is it today? Oh, lucky again. Twice in this one I was lucky. Buy the dip. Update on the SPX priced in gold. I said, look, this is going lower. Let's see. It's just getting out of control. Right again. NASDAQ. All right, you can see the flag here, right? Nice big drop, flag. This is going lower. Very simple to see. Here we are. Slightly lower. It bounced a little bit, but it's going lower. Let's go to the next one. Here it is. This is UK again. Right. Boom. Right again. My God, I'm so lucky. I don't know what to do with myself. So big thrust down move, channel 1, 2, 3 structure falling apart, blah, blah, blah. And finally, did I do this one? I think I did. That's the right one too, if I didn't do it. And this is the newest one, and unfortunately this one is not going to register till tonight or something. But this is the transports, right? And transports start to go, the economy goes. It's just that simple, right? You can see the channel, and you can see that it really didn't go much higher since when? December 2018, 17, December 17, early 18, right? It was kind of going sideways and kind of struggling, and now finally it's breaking the channel. And that's why I say bye-bye transportations. Airlines are tanking every which way. Royal Caribbean, nobody's going to go on a fucking cruise ship. You crazy? I'm not fucking going. I'm a pilot and I don't even want to be on an airplane. But it's my job, so what can I do? I go. Anyway, so everybody that is running around is like, oh, you gotta nibble, you gotta buy the dip. You haven't even started to sell. Okay, I mean, we haven't even begun. Look at that. It's nothing. We just took a little bit of froth off. Okay, when this thing starts to sell, believe me, you're going to know. And for all you guys that believe out there that, oh, you want to buy, you want to be greedy when everybody else is fearful, and you want to be fearful when everybody's greedy, right? And you think you saw fear? You didn't see fear. You don't know what fear is. Wait till this starts doing something like this. That's fear. Good luck buying that one. You're gonna be puking up blood buying that fear and being greedy. You're gonna be the fearful one. Believe me, within days you'll be like, you're not gonna have enough money in your account to cover the losses. Don't don't say stupid shit, guys. Okay, and be smart. Learn how to take good risk reward trades. Nobody knows what the future is, and that's what I do. Okay, I teach you how to take good risk rewards trades. I'm not always perfect, of course. Patreon.com/real macro. Come on down, and and uh, and you can learn a lot. I promise you, you'll learn a lot. All right, take care of yourselves. Come down to Trading View, and uh, and it's free. Subscribe and make fun of me when I get things wrong. All right, take care. Bye bye.